On, it's a conversation that you might want to hear as well, because as much as people thought that Q1 would be hit, and naturally so, by a lot of weak traffic, maybe due to the geopolitical stress in the month of May or otherwise, I think hotel companies by and large have done reasonably well. Yes, we've had some issues for TFS on the airport traffic, etc. But hotel companies by and large have done okay. Somebody who looks at that space so closely, because he's got a listed business, but he's also, well, a veteran in this bucket. Mr. Patanjali Keswani, known as Patu Keswani, very fondly by a lot of people, Chairman and MD of Lemon Tree Hotels, joins us right now on the show. Mr. Keswani, great having you. Neeraj here. It's been a while that we've spoken. Thanks so much for talking to us today.
Thank you, Neeraj.
I would love to know what happened in Q1 and what are the trends that one can derive from it, if any, for the rest of the year, because almost everybody, Mr. Keswani, I'll be honest, thought of, let's say, the geopolitical stress in the month of May and believed that inbound traffic from abroad, as well as maybe local traffic as well, would have gotten considerably affected. But by and large, the numbers from the sector seem to be very decent.
So I think, Neeraj, you have to consider, it's actually, firstly, these are seasonally weak quarters, Q1 and Q2. Number two, there is always base effect. So last year in Q1, there was a big deflation in demand because of the elections and the heat wave. So when you are comparing Q1 this year to last year, this year we had issues obviously with the geopolitical stress, as you mentioned, and that COVID scare. But last year the impact was much larger because of the elections and the heat wave. So actually, the performance in Q1 this year, because of the base effect of last year, looks very good. However, I'm not denying that as an industry, we did pretty well. Looking forward, I would say Q2 will not have the benefit of last year's low base. So rather than, I don't think we will do as well in Q2 versus last year as the industry did in Q1. So I'm talking from the industry perspective. Obviously, different companies will have different performance levels, but that's my overall perspective.
Okay, so some bit of base effect aiding Q1, Q2 may not necessarily do as well, but broadly, when we talk to everything which is consumer facing, be it discretionary, be it staples, or be it, let's say, hospitality, right? Technically consumer facing, I think the sound bites that we are getting, Mr. Keswani, are very varied, with no clear trend or linear trend around whether the consumer has revived spending or not. Now, in hotels, there has been great spending for the last 3 or 4 years. Do you reckon that to continue? Q2 may be an aberration, but does the uptrend continue for the rest of the year, if you will?
So look, I expect that the industry, or at least the performing part of the industry, will have early to mid-teens revenue growth this year compared to last year. But I am very sure that the rate at which the industry increased prices, which was like 20% in the past per year, that has got to moderate because there is some level of, I would say, saturation. So future revenue growth will have to be a combination of demand growth in terms of rooms, over which you can overlay the rate growth. So I would sound a note of caution. As I said, I expect early to mid-teens growth in the industry, or parts of the industry. I noticed you smiled, Neeraj. I do think in India generally, I sense there seems to be some, as you said, some wariness about spend, some slowdown. So I just get a sense that there is some slowdown in consumption.
Well, okay. I think my smile would have largely been around the fact that it is good to hear an optimistic voice in the scenario currently, because not everybody is, right? And Mahima, that's where maybe my smile came from. But you track Lemon Tree so closely. I'm sure you have some questions.
Yeah. So, Mr. Keswani, I just want to understand, because, you know, Q1 operationally also looked very nice. You did mention the base effect, but going forward, I want to understand that when you say that, you know, there is positivity coming in the entire space, do you think that largely the focus will be on increasing your ARR? And do you think that the mix will be shifted towards higher yielding segments going forward for Lemon Tree?
So I think the way we look at revenue growth is partly strategic and partly opportunistic. So in markets where we find that, you know, and there are many, many, many micro markets in India, wherever we find there is an opportunity, obviously, where demand far exceeds supply, then the way to go forward is you are already doing high occupancies and therefore you increase your rates. In markets where occupancies are anyway not too high, then the focus must be increasing your occupancy rather than focusing on rate. So it's a combination of these two. And ultimately, what you want is, as you are showing on your screen, you want revenue per available room to go up. Obviously, if the revenue per room goes up due to price hike, then the flow through is much larger than if revenue grows through occupancy, because then there is some implied variable cost which comes into the P&L. But broadly, what I am trying to say is I have no doubt that there is a structural story in play in the hotel industry. This part of discretionary consumption, in my opinion, is just going to grow and grow as more and more people move into the magic household income of about 35 lakhs a year. That is the magic number. It occurred in China. They calculated it at $8,000 per capita. And I think in India now, at this inflection point of its GDP, we are definitely going to see larger and larger numbers of Indians moving into consumption of branded hotel rooms. Which means what? It means that if the economy grows at 6% for the next 5 years, the number of such consumers will grow 3x. So it will not be linear or directly proportionate to the economy, but to the number of people who move into this part of the bell curve.
So, this is Harsh also joining in. You're very well placed to tap into that opportunity, of course, and you've given very, very strong guidance as well. You're planning to double the number of rooms which are available in your portfolio, and then thereafter double it as well over the medium term. Talk to us about the initial doubling. You've got an 18,000 room pipeline at this point, plus live rooms both. Talk to us about the glide path. How quickly do you get to 18? Where do we get at the end of FY26 and then thereafter?
At present, we have about a little under 11,000 operating rooms and about 7,500 in the pipeline. These rooms in the pipeline are a function of where those hotels are at the current stage of construction. So my best guess is that these 7,000 will be operational in the next 3 years. But at the same time, two other things will occur. We will obviously continue to add more hotels into our asset light side, which means that depending on whether that's an existing operating hotel or it's under construction or it is planned to be constructed, at different times, these hotels will also come into move from pipeline into operations. Then, since we have now, we are planning to list Fleur, which is our asset company, there will be clearly a certain opportunity to increase the owned hotels portfolio. So if I looked at it very broadly, I would say that by 2030, I would be very disappointed if we did not have something like 35,000 rooms operating and in the pipeline, which will give us, I think, about 10% of India's market.
Wow. Mr. Keswani, would you, like a lot of, not India hasn't had a lot of local brands which have truly become global. There are a few, but not quite. And then when we talk about hotel brands in particular, considering there is a large domestic market which allows large chains like you to expand within India itself, do you reckon that over the next 5, 10, 15 years, there is a local brand or two, maybe yours, maybe some of your peers, maybe all of you together, which could actually become very large global brands as well?
So let me start by talking as an Indian, and then I'll get to the hotel industry. I've always wondered why all the very large market cap companies, maybe it's partly due to the exchange rate, but I mean, why do all trillion-dollar companies only originate from the United States? Why do $500 billion plus companies originate in Europe and in China? I actually was looking at this from the perspective of economic growth. And really, China's growth was 2006 to 2007, 13, 14, which is where, by the way, India is exactly where China was in 2006. So unless we commit multiple self-goals, I have no doubt that we are, as I mentioned earlier, in now part of a structural cyclical change in consumption, which will then flow down into the whole economy. When you look at those, those trillion-dollar or $500 billion companies, they all started by saturating their market and then going global. How do I see the, say Marriott? Marriott actually started as one brand in America. I think original Mr. Marriott in the 1920s had a push cart. From there, he bought a hotel and then over time saturated the US, then expanded to wherever Americans went. The story is the same in most successful businesses. They want to capture more and more share of their existing customers and more customers. What do I see in India? I read a very interesting article the other day, which said that the foreigners arriving into India were only 10 million. But the Indians going out of India, this is 2024, were 30 million. So if 3x are the number of Indians going out, why would I focus on the incoming? Why would I not follow these 30 million who I estimate will grow to 100 million as happened in China by 2011? So yes, my view is that Indian companies in the hotel space specifically will go global. They will follow their Indian customers. And by following the Indian customers, they will be able to offer better returns to asset owners all over the world because there will be such an explosion of Indian consumers going all over the world. So short answer, of course, I want to be one of them, but I'm pretty sure there'll be 2 or 3 hotel companies in India who will be large players on the global stage in the next 10, 12 years, 15 years.
We would love to stay in a lemon tree at the next available opportunity, I must say. But yeah, this is unique. We haven't seen too many people speak about it this way, Mahima and Harsh, and this is really, really nice to hear this.
Yeah. So I think, Mr. Keswani, I have a follow-up on that. Right now, I think in international presence, you're there in Bhutan, Nepal, and Dubai. Just want to understand from a longer-term perspective. You did mention 10, 12 years down the line, but let's say 5 years down the line, any particular geographies that you're aiming at?
So let me put it in another way, Mahima. Today, roughly, say 30 million Indians travel outside. Where do they travel? So we looked at that too, and really there are 7 or 8 obvious suspects. The largest numbers go to the United Arab Emirates, which is Dubai. I think 8, 9 million go to Dubai, Ras Al Khaimah, Sharjah, etc. And I'm not talking transit, I'm saying they go there. Then there is a very large number of Indians who go to Nepal, to Thailand, some to Sri Lanka. Then, of course, there are the Indians who go on to Hong Kong, Singapore, New York, and London. I'm giving you the cities where Indians go. In the latter case, they are obviously transiting in many cases. But actually, I'm sharing some of our insights. I think the most exciting markets for an Indian company in the hotel business right now is the United Arab Emirates and Thailand. And we would and Nepal, of course, and we would certainly want to be present there at scale.
Reason for that, Mr. Keswani, that you pick these markets, is it only because Indians venture there and that's why the opportunity is large, or is there a value plus volume game at play there?
See, I have a view on Indians. Indians are like the Japanese were 40 years ago, the Americans were 55, 60 years ago, and like the Chinese were 15 years ago. They like familiarity. And especially the first time Indian or the second time Indian who travels to a new geography, they want the psychological comfort of feeling somewhat in a safe environment, emotionally safe, psychologically safe, and certainly they like Indian food. So we would like to offer that to them.
Okay, this turned out to be a far more interesting conversation than what we had thought when we thought about speaking to you with results, Mr. Keswani. But lovely talking to you, as always, I might add. Thank you so much for taking the time out.